Good morning. We're looking at the weekly FTSE chart. Now, as you can see, we closed below the 23.6 weekly fib level, and that is 74.49. We're down at 73.08 at the minute. Spread's a little bit wide, but you know, after the close of 73.92, this has opened up a lot lower. S&P's up, down a lot lower, and so is the Dow. In fact, all stock markets are looking a bit iffy at the moment, as I've said. Now, the close below this 74.49 leaves a short-term objective of 72.76 down to here 72.49. Now, with this 38.2 on the weekly chart, you can see that if we do break this level and the 55 week period moving average, you know, FTSE's had it, and we can only really go lower. You've got the 200-day moving average, week moving average, coming in at 70.52. So although that seems a quite a way away, you know, look at these levels, look at the fibs, look at these moving averages, and you can see here that our stochastics have just weekly turned lower. This is not a good sign for FTSE. It's not a good sign for any market, but it's particularly not a good sign for FTSE. If you look at the monthly chart, they're still pointing higher, but at 94%. So obviously we can preempt that. So you're looking at all the major time frames that I look at are all looking the same way. Now, when the market gets the bit between its teeth and thinks it's going higher, which obviously it's done from this point here, we've had corrections, but by and large, all year we've gone up. And this key reversal week is quite significant. It's the first one we've had since the rally started back at the end of December last year. So let's take a look at the daily. So you can see what's happened. You know, you had all last week just trading lower. There was no getting back in, there was no seeing a correction. It just traded lower. So for that reason, and I have said a lot in the last couple of months, that unless we followed a certain criteria, the market would fall. Obviously on the daily charts, because of the force of the fall last week, you're seeing it looking a little bit entering into oversold territory. But look at your ROC, it's pointing down. It's now below the zero line. Your RSI below the zero line. So what you need to do is, if we get any rallies today, you've got this resistance up here at 74.49, you know, but we're trading 73.10 at the minute, so it's all not looking too good, I'm afraid. But if there is some correction this week, here, up here, is where it should hold. If we open where we are currently trading, you're down here, you know, that's not good. But I think you could get a little bounce from this 32.76. You've got the 200-day moving average coming in at 71.84. You've got lots of lines that I put on the chart. You've got this one here, and that's coming in today at 72.38. So there is support, but it's only going to be, I think, for a very short time, and you would be looking to sell rallies. The only time that FTSE would look a little bit stronger is if we bounded up from down here and took out this resistance line here at 75.30. I never say never with markets, because they do have a little way of finding their own feet. But with this, you know, you've got to realise that every single long-term time frame is not looking good, and you're seeing also a shift in market sentiment. And that really is what it's all about. You know, the bulls took it up there, it failed the next day, and it failed last week. Good luck, and I won't be around much, but I'll be doing these morning videos on certain markets every day.